Hi everyone, welcome to my YouTube channel The Mighty Bull. Today I am going to talk about the current market structure and how I am navigating this tough times in this market structure. Why this is a tough time is because if you had seen, the Nifty is near the all-time high zone, but the portfolio are not working at all. The portfolio wise, the stocks I select doesn't go it's as expected, and most of the stocks fail. So the current theme of the market is like that it frustrates everyone, and most of the trades we take fail, but Nifty is inching higher towards the all-time high zone. Whether the Nifty is going to break this zone and move up, or will it form another volatile contraction pattern, or will it come down up to this level and then move up, nobody knows. But what I can sense is Nifty is performing, but portfolio wise the stocks are failing. Why this happens? This happens mainly because of this reason. Okay, the reason is Nifty is of leaders. Nifty consists of top 50 stocks where the mutual funds are forced to invest some amount of money through SIP every month. Okay, so when a person is investing through index funds or other active blue chip funds, okay, what happens is the mutual fund houses has to inject the money without holding them, right? But your portfolio is made up of stocks that are smaller in nature, that are smaller in market cap, that moves 20 to 30% in a short period of time and then goes to a period of lull. But Nifty comprises of 50 stocks. This is the main reason that money keeps on flowing into Nifty, because institutions think that this is more stable, but it is not conducive for small cap stocks. So I'm going to show you the chart of Nifty small cap 250. As you can see, when Nifty 50 is nearing at the all-time high, or it has almost breached the all-time high zone, the Nifty small cap 250 index is trading well below 11.49% from its all-time high. Okay, so trading small caps is good to generate alpha, but the time is not yet ripe. The time is not good to trade small cap stocks. In fact, I would suggest no trading should be done in this point of time. I will explain in the later part of this video why you should not take any positions in this current scenario. But if you are seen in Twitter or social media, people are saying that this is the first time they are seeing that Nifty goes to all-time high while the portfolio is not performing, or while the small cap is not moving, something like that. But this is not the first time, let me tell you, because this had happened in 2019 also. I am going to show you two charts now. One is of Nifty small cap index, as you can see here, and 2018 to 19, and this is of Nifty 50 chart. In this chart of small cap, you can see from Jan 2018 the small cap performed very poor, and it was forming a series of lower high and lower low, while at the same time Nifty 50, that is big cap or large caps, started to perform substantially well, and they were forming consequently or consistently new highs. Can you see here, this was a new high, and then after some period of time again it formed a new high, again it formed a new high in 2018 to 19. All this when the small cap were bleeding like anything. Even during those times, if you have taken position in small caps or names which are not well known to many, or with the smaller market caps, then those stocks would also have failed. There is no doubt on that. This is the scenario exactly that has happened way back in 2018 to 19, which is similar to the situation you are seeing now. Okay, but after this happened, what happened is something you have to take note. After this period of 2019, then came the crash. Okay, so what does it mean? It doesn't mean that do you expect a crash soon? No, because this has happened because of COVID, but I don't say that we are going to crash or the market is going to crash. Nobody knows that, and I don't want to prepone my judgment that market is going to crash and nonsense like that, because I really don't know whether it will crash something like this or not, because markets are very dynamic. Anything can happen. The market may be reaching a new high within 2 to 3 months now, or it can go a period of lull also. So the points to consider is the broader market moves up but small caps struggle. So it is not a healthy sign for the market overall. That is what I want to conclude with this um, with this thing. Okay, the broader market moves up, small caps are not moving. It tells just only one thing, that the market is not moving as an uniform engine, right? Some parts of it is moving properly, but most of the parts are not moving. So you have to see the intrinsic decay that is happening behind the Nifty 50. Below the Nifty 50, there is this decay over there. The outer structure seems to be fine, but the inner structure of the market is not fine. Okay, so in this market, if you take trades, any trade setups will fail. Okay, so the traders should wait for clear signs. Why you should wait for clear signs is because in this market, if you take any trade setup will fail, whether it is continuation, breakout, pullback, moving average, anything will fail, because I will show you examples. Quite a few examples will be shown here. And before that, let me tell you a disclaimer: the stocks shown here are just for educational purpose only. I don't recommend any purchase of stocks. Any purchase of stocks should be done based on your own research, or you have to consult with your financial advisor, if any. Okay, so this is Asha Purmin chart. You can see this is a beautiful uptrend was there, and then the stock went into a continuation zone. After going into continuation zone, the stock broke out here, and then again a breakout happened here. But what happened after that? The entire move got fizzled out. The breakout candle got entirely engulfed within 1 or 2 days. Okay, so if you are taking a trade here with a stop loss of even this pivot, you would have stopped out, or if you had kept the stop loss here, it would have been very deep. So this breakout failed. Usually when breakout happens, what happens? There will be a follow through candle and the stock keeps on moving higher and higher, right? But this is not what had happened here, clearly. So next example, even if you are a pullback trader and you think that pullback framework would have worked in this environment, I would like to tell you that this was a good stock which had a good run up here from here to here, and then it pulled back, and you can see the pullback was also orderly. When the stock pulled back here, the volumes were very low, and it showed a beautiful volume increase when the stock started to rise. You can see the volume getting increased as the stock starts to rise. Okay, and then it broke out finally here. And then what happened? Within next day, there is no follow-up. After the breakout candle, there is no follow-up. The stock starts to plummet down and hits your stop loss. Okay, so pullback framework doesn't also work in this market. And if you are looking for patterns, some beautiful patterns also fail. See, this is a beautiful cup and handle pattern. This is one stock I traded. Actually, I think I entered some here and I entered again fully here. Okay, this is a beautiful cup and handle breakout. But after the breakout, what happened was after the breakout, the stock failed to follow through, and the entire move was taken out just within few days, and the stock started to plummet down. If I had not placed my stop loss here, I would have been in deep drawdown. Okay, so cup and handle pattern also don't work. Now I am going to show you another example. This is other HFC. You can see this is a beautiful strong flag breakout pattern. After a strong up move, the stock started consolidating, and then it finally gave a beautiful breakout here. Anybody in hindsight, anybody in real time would have thought that this breakout is going to go like this, somehow like this, right? The breakout will go like this, go like this. But it was a dream, just a dream, because the moment you took the trade here, within few days, the stock started to plummet and it started to form lower high and lower low structure. this is the theme of the market that is playing. This is the theme that is happening all over the stock market, particularly in names which are less known to public, or which are very smaller market caps, okay, when compared to the big large caps. Fine. And this is another example of Q power, showing you that even pullback to moving average also fails. Can you see here, this beautiful stock after a good run up had a orderly pullback here. After a good run up, had a orderly pullback here. During this pullback, see the volume, everything is fine, right? And you can see the occasional spikes in the green volume bars. So it promises us to take the trade. But after the stock consolidating between 20 and 50-day moving average, finally it gave a breakout on this day, which trapped the retailers. The next day onwards, the stock just kept on falling. The stock just kept on falling. It showed no fight at all. Just after the breakout, it starts to fail. How this happens? Why this happens? Because there's definitely decay that has happened, and this breakout would most probably be caused by the institutions also, because they want liquidity here. Once the breakout happens, retailers come in, they buy the stock, they provide enough liquidity so that the big institutions starts to sell the stock. That is the only valid reason I can farm out. But let me tell you one thing, there is no use in going in search of any reasons. The stock doesn't work out. That's the main point. That's the point you have to be considering here. Okay, the Q power also failed. Usually in good markets, what happens? See here, the stock after a beautiful run up started to come down with orderly pullback, and then formed a consolidation zone, and then it broke out. After the breakout, you can see the beautiful move here. Okay, but this time this is not happening, because not only, I don't want to say that it is only because of the stock, but this is just that the broader market, or the market structure is not happening in a proper way. It's not good, right? So I would also like to give some points about the market breadth, a small overview. Market breadth is just an indicator that how the markets are behaving. This is not a definitive solution to say that market is inching higher or lower. But what is happening here is, you can see that green line is the amount of stocks that is above 50 DMA, and black line is the number of stocks above 200 DMA in percentage. Okay, so as of today, the video is being recorded 4th December. You can see that amount of stock that is trading below 50 DMA is around 29.6%. That is, sorry, only 29.6% of stocks are trading above the 50 DMA, and only 38% of stocks are trading above the 200-day moving average. While you can see in the month of April to July, when the market was somehow healthy, in case if you ask me, I will tell that the only months where in 2025 the market was okay was in April to July 2025. After the biggest fall on April 7 with the gap down, the market started to recover, and it ran up for April, May, June, and up to July it was okay. Then it started to plummet. During those period, if you see, the amount of stocks above the 50 DMA was around was more than 80%. At one point of time it was close to 90%, right? So this is another indicator to show how the breadth of the market has been in constant decline. Okay, so at this point of time it is better to sit out, not to trade. And apart from that, I would also like to show you another chart. So see, this is a chart which I took from chart link, which shows the 30% movers in past 1 month. Okay, if you can see this chart closely, you can see after after April, the amount of stocks that gives 30% return in 1 month, okay, in past 1 month, consistently started to rise. At one point of time it reached around 145, 150, and at times it also reached near to 180, okay, at the beginning of July. And then after July, what happened is, after July, exactly, this is July 31, after that, the amount of stocks that is giving 30% return in a month started to decline. Can you see the drastic difference between this and this? This says that this was the phase the market was very good for swing trading or short-term trading, even positional trading, I would say, because most of the stocks hit the stop loss. Even if you keep it around 10%, 12%, also the stop loss are being hit because the market is definitely not good now, okay. So this is the period where you should have been very active in trading, and you should have somewhere down here understood. It is not possible to understand here itself that the market has weakened too much. That would be too much to only if you are what to say, if you are a predicting genius, only you can understand these kind of things here. At least by September, mid-September, you should have understood that the market is not going right and it is decaying, okay. So now, as the video is being recorded on December 4-5, you can see the amount of stocks that has given 30% return in the past 1 month has become just 30, okay. Here I am rounding out here, thus become just 30, not more than 30, okay. So this is how the stock market has deteriorated. That's why you should be very careful in trading this market environment. So what to do now? So the best strategy is to stop trading, okay, because no position is also a strategy in trading. It's not necessary that you should always be in a position, or you should it's not a full-time job, swing trading is, the name swing trading is, you trade when there is swing, okay. When the swing is not in your favor, you just sit out. That's the only way, that's the best way you can do. But it is also not that much easy to sit completely out, okay, because you have to gauge the market environment. If you put some real money only, you will be interested in noticing what happens, right? So what I do is, I participate with very minimal positions here. For example, if I am normally buying 100 shares, now I had reduced it to just 1/10. That is, I buy only 10 shares now, okay. So if you buy 10 shares, buy 1 share. That's what you can do now. So wait for clear confirmation before jumping into bigger positions or trading with your normal position size, okay. So that is what I want to imply with this video. And by confirmation, what I mean is, your portfolio is your mirror, right? Your portfolio will tell you when the stock market is good. This is the best thing to gauge whether the market is working in your favor or not. If you have read the book by Mark Minervini, in his book Trade Like a Stock Market Wizard, you can see that he doesn't follow the index, okay. I don't say that following index is bad. What I just want to say is, following just the index doesn't give you the clue. That is what the market is proving, because the Nifty 50 is inching higher and higher, but your portfolio is going downer and downer, right? You are not getting richer, you are getting poor, and you're losing out money. That is what is happening. No trades are working out. Even if fraudulent or a fake influencer also can't post any trades, because there are no follow-ups. He can't even post some random market picture that I traded this stock and it has went now to 50%, because there is no stock that has gone like that, right? One or two maybe, but I'm saying in general, right? So your portfolio is your mirror. There should be follow-throughs once the breakout happens. Even if you are a pullback type of player, you don't buy the pullback right away, right? You will buy the breakout after the pullback, right? So that breakout should have follow-throughs. So the performing stocks usually goes up and up, and they don't come back to your buy point. Most of the time the breakout candle doesn't get stopped out. That is what I had seen when the market is healthy. When the market is not healthy, usually it comes down and breaks your head. See, this is how the strong stock perform. Can you see? This is a recent example only. This is the stock is nothing but Shriram Fin. After this breakout, you can see the breakout with volume, and then the stock started to move up. Okay, there was no looking back. Can you see any one red candle can you spot in this move till here? Now the stocks are starting to getting tired of. I can see that the trend is getting weakened. Definitely the trend is not strong, as you can see here. Okay, that wide range candles, expansion on the downside, and if my prediction is right, this will be a trap. Okay, the people who are buying here are buying at the end of the move. They think that this breakout will work. Sorry, this range expansion candle would be a real candidate for them, but I don't think so. The definitely some days, even if it goes a little higher than this, I think the trend will come down or it will consolidate. If it is a very strong stock, it will consolidate for some time, or if the market is poor, the stock will just come down, may even come here to test this zone. Who knows? Okay, so look for such stocks in good environment, not now. Okay, even if you, because if you are searching for a stock like this now, if you take 13 positions, out of that 12 will be losing position. I can bet that, because you are looking for a lottery. You are just gambling. You think that in the 13 position you will get 5 lotteries. That doesn't happen. That's not gonna happen very soon, at least in my opinion, in my humble opinion. I can be wrong, but this is what is going to happen. Okay, so the 12 positions will be losing to win one trade. Okay, so even if you keep 0.5% loss per trade, if your 12 position goes wrong, you will be seeing a portfolio loss of around 6%. That's how it works. So if you are trading with a capital of 10 lakhs, you will be losing 60,000. Why to risk just to find this one lottery, which you may not find at all, right? Just sit down. Who is stopping you, or who is asking you to perform the trade? Because why I say this is, I will also show you the recent example. This is Power India. Okay, this stock was beautiful when this breakout happened. Okay, this stock was beautiful when this breakout happened. This breakout is happening near the all-time high zone. See, this is the all-time high zone. That is, the breakout happens beautifully, and then what happens? Once the breakout happens, the stock starts to plummet. Also, the way the stock falls off is really it's really painful, because usually it doesn't fall like that. Even if the breakout fails, it usually fizzles out like this. Okay, it goes like this and then tries to come up and then goes, and then there will be orderly pullback. But here there's nothing. The breakout happened here, the stock started to plummet in 3 big huge red candles. This was a 7% loss candle, I think, and yesterday or today, I think the stock plummeted 4% more. So this is how the market is. So it is better to sit out. That's what I want to say. So what to do? Trade with the smallest size possible to gauge the market. This is just to gauge the market. Okay, so suppose if your account size is about 10 lakhs, trade with just 1 lakh. Okay, so even in this 1 lakh, if you lose 10%, it will be just 1% of your entire portfolio. That is 10 lakh. Okay, so that is what I would want to say. So that's it, guys. That's it for today. So I will be coming with another market update. If you like my videos, you can consider sharing, liking, commenting, and if you have any queries, you can ask me also. I will try my best to answer your questions, but definitely I can't recommend you any stocks, but I can clarify you some doubts regarding market, or if you want me to cover some topic also, you can tell me. Thank you, guys. Bye bye.